Hello traders, hello everyone, my name is Gregor and welcome to our new episode Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will cover Aussie, gold, S&P 500, crude oil and dollar yen. Now firstly, looking at the Aussie dollar, as you know, this pair has been driving to the downside. Recently we have seen a sharp sell-off which actually accelerated after we have seen a reversal or temporary top formation on the S&P 500. Now this market is now showing a 5-wave drop from 2021 highs, and we know that 5 waves is a structure that needs a 3-wave retracement. So I would not be surprised if we see a price stabilization towards the end of the month. In fact, we have seen a very nice move towards the 61.8% for a 5th wave target, which comes in around 0.7 psychological level. So I would not be surprised to see more upside, especially after this new COVID variant. Fear is now trying to calm down. So I think that more upside on stocks, a new resumption higher could be positive for Australian dollar. Now even Reserve Bank of Australia noted that they are not concerned about this new COVID variant, that this should not threaten the recovery. So in my view, we could see more upside here, at least in the near future, for Aussie dollar, since we can also count 5 subwaves within this 5th wave. So we are now reversing very nicely higher, trying to stabilize above the previous swing low here, which was on November 30th here around 70.60. So if we can close above that level, I think that there will be more upside. Here we have this trend line resistance, which if broken should be another confirmation that Aussie dollar completed this 5 subwaves down and that we are headed at least for a 3-wave rise. So in such case, I think there can be some opportunities on the long side after a setback, of course after this trend line is broken. You also have divergence on the RSI, which normally occurs between waves 3 and wave 5, and normally suggests that bears are losing strength. So another indication why I think that at least in the short term Aussie can recover even more. Now let's take a look also on gold. Now we've been tracking this triangle, a very big one here on gold, for a while. It's still ongoing, an ABCDE pattern. So ideally we are now in a wave E, but even wave E should be made by 3 waves. So I think that there can be room for more weakness towards the lower side of the range. That's one idea. The second idea, which is also valid for higher degree wave 4, keep in mind that 4th wave sometimes unfortunately can be very complex, so that's why I'm tracking also another interpretation here, where you have this triangle placed in wave B rather than representing the whole price action for a wave 4. In such scenario, you would expect more weakness for this wave C, even back below 2021 levels, before market may stabilize sometime next year. So in either case, we think that in the short term there can be more weakness, okay? But when and from where this weakness may occur? Well, notice that we have 5 waves down here on since November highs. Very nice 5 waves down, ending diagonal in a 5th wave divergence. We've been tracking this one quite closely, and we're looking for potential price stabilization at 1758, which was the swing low back from early of November. Now what we see is a break, trying to price to travel out of this downward channel. Not really a strong breakout yet, but I think that this current price action indicates that we can already be trading in a wave B. Now wave B can be a sideways price action, can be a deep correction. In either case, I think that 3-wave structure to the upside will be limited. Ideally that usually happens at the former area of this 4th wave, which is at 1815. So definitely keep an eye on this resistance for potential new sell-off if we will rally towards these regions in the next few sessions, few days. Also keep in mind that more upside here, at least in the short term, could help Aussie to stay supported as well. Now let's take a look on the S&P 500. Now this one is still in very strong uptrend. As you can see here on a daily, I'm looking for continuation higher in a 5th wave. We touched the first support at 45.60, the second is as 42.62, but if the trend is really strong, well, we may not get any deep pullback. There's also an alternate scenario where this current rise or recent price action could also be part of an ending diagonal. but once again, I know that this is a very strong reversal bearish pattern, but even this one suggests more upside here if the recent swing low holds. And now let's take a look on the smaller degree time frame, where you can see a very nice overlapping decline. I think that this could be a WXY correction, maybe already finished, since you have a very decisive break out of a downward channel. Now looking at the 1 hour chart, well, notice that I can count 5 waves up. So even if this current recovery will be limited, and let's say that we do not see new all-time highs on the S&P 500, I still think there is room for more upside after this upcoming retracement, because a 5-wave recovery out of that 4-hour channel suggests that we are turning back to bullish mode. So even if this bullish mode will be temporary, it should be made by 3 waves, because even this is a corrective recovery as part of a downtrend, meaning a limited upside, you still need an ABC structure. So based on minimum requirements, I think that after the next dip with the ideal support at 45.88, we will see more upside either into wave C, maybe even into wave 3. So in the short term, I think that this market could stay supported while, or in uptrend, while these early December lows are in place. Now let's take a look on the crude oil. Now crude oil has seen a very sharp sell-off recently. We have seen a very decisive break out of this upward channel, clearly in impulsive fashion, meaning that we are in a new corrective phase. Now corrections, once again, can be very tricky, but based on minimum requirements, they should be made by 3 waves. And what I see is only one leg to the upside, so more upside for wave B, which could also be the right shoulder of the potential head and shoulders pattern, if you consider that around 61 could be the neckline. So in the next, let's say, in the next few months, I think that this crude oil could actually drop towards or below $60 per barrel. And now let's take a look on the 4-hour chart. Here we can see this ongoing recovery could already be priced in a wave C here, okay? Or maybe this wave B will be a little bit more complex. But in either case, I think that first very important resistance that we should pay attention on is at 72.70. The next region would be around $76 per barrel, which is also the 61.8%, and then you have obviously this zone of the previous subwave 2 here. So that's the zone that we should track on for potential limited upside here for this current wave B rally. Now let's take a look, as we said, also on final market today, which will be the dollar yen. Now US treasuries has recently seen some kind of a recovery. This allowed dollar yen to come a little bit lower with US yield, and what actually occurred is that market is coming below this trend line support here, connected from 109 level. And notice that the previous rise actually occurred out of a triangle, meaning that this could be a top, because legs out of a triangle are finally within a higher degree structure. So I would not be surprised to see market stepping into a higher degree correction, meaning more weakness may occur in upcoming months or weeks. And when I look here on the 4-hour time frame chart, well, notice that this was quite sharp drop back towards or below 113 level with a clear impulsive personality, while the market is now rallying in 3 waves. So if we are on the right track here, then very nice and important resistance should be around 114 to 130 or 50 area, which is also the 61.8%. So that's the zone from where I think that we could see a reversal in the upcoming sessions. Now if we drop from here and let's say back towards 113.10 or 00 level, then I think that more weakness immediately should follow towards lower prices. Okay, the invalidation level obviously of this wave count is at 115.50, which is the high, because we know that if this is wave 2, well, wave 2 must not retrace more than 100% compared to wave 1. So that's why this is invalidation level, and we are observing potential bearish pattern here. Okay, traders, thank you very much for attention. I hope that you enjoyed this video, and talk to you soon. Bye.